Last time we had interacted about the general marketing and how marketing is required in current world. Time is changing, shipping changed, so LIC has also changed a bit. Today I'll be mostly talking on LICs because there are some development happen and what are the reasons on this. Mostly I have never been interacted with you on LIC's product and its illustrations. Mr. Somnath or King Star team is taking care of. I'm based in Dubai, Abu Dhabi. So Abu Dhabi team is knowing me how I am dealing with that. So there will be a different way of looking at LICs in my way. So I will share my screen and then I'll start the presentation. Hopefully you have permitted me, sir. Kindly permit me because I'm not able to share my screen.
Yes, Pradeep, you can share it now.
Okay, thank you, sir. Are you able to see my screen?
Yes, we can.
Okay, thank you, sir. Okay, fans, people are in the market, it has been told that there is objections, but I don't say it is an objection. It is an understanding bonus, the first thing, which has never been discussed. I don't think has been discussed in the past. Probably I try to first make you aware. So next 60 minutes, not 60 minutes, maybe 45, 50 minutes, I'm going to provide you certain empowerment methods, empowerment confidence level building. That is what I'm going to do because I always think optimistic view. I don't think the challenge and restrictions in the market. I always think the optimistic view. So I'm going to give you as a marketing consultant what we should be the strategy in the market as of now. LIC is a huge brand. We are not a small company. Last 3 decades, our promise, our delivery is more than 100% of the promises we have made. So it's a very old company, old guard in this market with a huge brand in India because most of us are dealing with Indian market, NRIs here. So in next 60 minutes, I'm going to give you just broadly ideas about the type of bonuses of LIC International from marketing consultant. What is it? Not from a literature point of view. What as a marketer should know the type of bonuses and how it is affecting the total overall interest. I'm going to also talk on the uncovering the truth, the impact of reductions of one part of bonus. There are many truths which is prevailing in the market that is not exact true. So there will be fake also. Fake truth is being propagated by some of the other people, but I'll tell you the exact truth and impact on reduction of one part of bonus. I'll also talk about the patterns of financial markets with the special focus on fixed income group, a plan of opportunities and its relations bonus, how it is related with the bonuses and why, if there is a sharp decline in the for current year, how it has happened. So probably we'll find the story behind this. Then also we are going to take the fact check on LIC returns schemes. After new bonus rate, it has impacted the entire return perspectives, whether we were giving 10% and it has reduced to 3%, is it the story? So that also fact check with some of the examples will try to give you an empowerment. So, and end of the friends, all of this will compile it, my presentation in big confidence with facts and truth. Not a lie, it's the truth we are going to say. So I'll start with the first point, understanding the type bonuses of LIC International. Friends, I know many of us in this market, those who are dealing with LIC products, they must be aware of the 2 type of bonus. The first bonus, which is annual reversionary bonus, which is declared every year and which may change, which may not change. That is what is been the history of the LIC. That also we'll study. There is another bonus, which is a final addition or terminal bonus, which is paid at the maturity. There is one third bonus, which nobody remembers, and there is not any sales point on this, and that I'm going to talk about. There is guaranteed bonus, which is added at the beginning of the policies, and no market on that. So probably that is the marketing point which I'll today in this session. First of all, it's a very simple on which this hue and cry is going on in the market is reversionary bonus declare every year. Let us take anyone 35 years of old, 202, 15, 5 years of limited term, premium comes 16,000 yearly, annual bonus declare every year by company. And this year bonus rate has been declared in current year with the reductions. This is what the news. But for that, you must understand why there is a cry, there is only, if you see the robust bonus rate of 28 years, since beginning from 1989 to 1990 was the first year which declared the bonus, and then 2017, 18, and this year 2009 declared the bonus. We have a continuous graph of upgradation. I have seen a couple of news from the market in the last couple of days about some of the companies. I don't want to name those companies. They say, you see, they are doing the marketing. They see LIC has reduced practically bonus rate, but we continue to give the same rates. Friends, they are right. They are very low, because they are going to continue the same rate, because they have not declared even a single bonus even in last couple of years, in last 5-6 years. So they are still on zero. So they continue to give the zero returns, and we are still continuing. So this is what in one line I can say in UAE market, no company except LIC holds the golden history of promise and delivery, and we are delivering more than 100% with promises over the period of time. This is the current year bonus rate. Again, coming from this to this, there is a huge change, almost 60 to 70% change in the bonus rate. So we'll talk on this in the current session. There is second bonus, which you should understand, which is paid at the bonus. Normally, it doesn't mention in the calculation sheets or illustrations which we supply to all of us. But there is an additional bonus which is paid at the maturity. Such bonus is declared at the maturity of policy and paid once as a final addition bonus. Second, LIC, recently, if you see the rate, it has declared 2% of sum assured as a final bonus during current year. So friends, end of the day, you say in current year also, there is no change in the rates of FAB and terminal bonus in current year. Now, the third very, very interesting point, which I'll tell you, is a guaranteed bonus added in a sum assured, which never understand, and why we call it as a capital guaranteed plan. So premium which we pay, your capital is guaranteed. So we are not guaranteed only the capital. We are giving some extra amounts and extra bucks. Initial taking the policy, you paid one premium of monthly. You have a huge amount is assured as the day one. Let us take an example. Let us take a sum assured of 100,000. Annual premium comes to 16,000. So total premium payable in 5 years comes to 1,000. But sum assured means your guaranteed amount from day one is 100,000, irrespective of the term of the policies, irrespective of whether you take a death claim or a maturity claim. Your minimum 100,000 is guaranteed, whereas you pay only 81,000. So friend, guaranteed bonus in 15 years is added in the inception is how much? So difference between 100,000 to 81,000 is $18,000 is added at the beginning from day one. And if you divide by 15, which is the term of the policy, that comes to 1.22% of sum assured. But the point is whether we should talk about sum assured, because customer is worried about the premium, not about the sum assured. And this comes 1.49% of total premium. So again, friends, this comes to, if you calculate in the bonus rates, which we mentioned, like you call it 32, 30, 12 rupee, $12.20 of sum assured, and 14.90 per thousand premium is added from day one, which nobody understands, nobody talks on that. The guaranteed assurity which we give it at the beginning is not been propagated. So for marketing consultants point of view, you should understand this one part. These three bonus, if I've combined different terms, many people have a question, so no, with the term and how it is varying. So I prepared one small sheet to understand you. See, this is one sheet. The highest sold plan is PEN 202 is the basic endowment plan. A very track record is very, very good, easy to convince, easy to sell, all flexibility of options are there. If you see, I've taken 15, 20, 25, 30, 35. For a different premium, if you right column, write this, if you see this part, 1.49, 2.16, 2.60, 3%, 3.37% of guaranteed yearly bonus is added from day one. Forget about FAB, forget about the reversionary bonus, which is declared every year based on the investment yield which we generate from the market. But this is company's guarantee from day one. I can tell you, friends, a very, very high percentage bonus in tune of 1.49 to 3.37 yearly total premium is payable, guaranteed from various terms from day one. So I'll just to try to understand, if you compare in the current market, we are the only and unique company, whatever company who is being in the market with similar kind of products, they have not even declared a single penny in last 5 years. So they may sell sum assured plus bonus at maturity, but where is bonus? They are assumed, they are still assumed, but we have a track record. Going further, how this 3 bonus is going to affect. So the fact is 50% is contributed by our inbuilt guaranteed bonus, and 30% is contributing the reversionary bonus, which is flexible and which has changed in the current year. There are reasons behind it. I will going to talk about that. And there is third, terminal FAB. And whatever reasons I'm going to say, whatever concepts I'm going to say, friends, this is from a customer to understand. Let us not go from auditors to understand, from compliance team to understand. Let us understand from a marketing to marketing, herd to herd, a marketeer to the second marketeer, to empower you that this is what customers' response should be. Customers should be aware, customers should be trained on this. So if you see the contribution of 3 different types of bonuses in every product of LIC, 50% is already there from day one, 33% which is based on the market, so the customer can be leveraged to give a better return in long term, and 17 we give a loyalty bonus, a guaranteed bonus, which is a FAB bonus at the end of the policy. So if you continue to hold the full policy term, we try to give. 50% of total bonus is guaranteed from day one. And friends, the change is out of 3 different types of bonus, change is only a reversionary bonus, which is contributing hardly 33% of the total book interest share. So friends, understand there is a very negligible impact on total premium, total return considering current market condition. I'm going to talk about much detail on the return impact in later. So, but first of all, why bonus is reduced in 2020 for a year? And friends, remember, before I start why, I'll tell you this is only 1 year reductions. It is not that your future all returns will be rated on the same term. It is current year reduction has certain planning on this by the board, because this is a government of India's run board and company. So there is some strategic planning to sustain a long-term return for the customers. So, but before that, let us understand the bonus reductions reason also, which can be understood, which can be communicated to the customers. For that frame, strategic answers to such queries I have prepared some, that is 3C skills. And 3C skills, which always I believe, which I always as marketing also, in last session also I talked a length on 3C skills. So what are 3 skills? 3C is communication, collaboration, and confidence. Friends, the communication has to be there. So I'm trying to communicate on behalf of LIC to make you understand the reason and the strategic decisions behind this. There is second thing, I wanted to collaborate. I do not want to inform. I want to make us a collaboration, because we as a stakeholder in distribution channel, we should understand the company. You should believe on the company's decisions. So if you have a confidence on company's board decisions, probably you will propagate a very, very confident thing, similar things to the customers. So 3 things, my presentation will be based on this. Friends, confidence, communication is the first things we must understand. Understanding the patterns of financial market after 2018, December 2018. Just understand 2019 whole year, what was the pattern of financial market? Because if LIC takes money from customer, you bring money for LIC. So we invest also in a financial market to generate a return back to the customer. So there is a certain pattern we must understand, and that pattern is giving you of the basic understanding of the technicalities of the investment portfolio. Second, after this pattern, this COVID-19, a new uncertainty to all sectors, including us, is another challenge which has come. So one by one, how it has affected, we'll talk. And finally, friends, we are a long-term insurer. We are not looking for 2 years, 3 years, 5 years company. We are having a policy of 35 long years. Last 30 years, we have been giving policy servicing to customers. We are for another 300 years to continue in this market. So we are a long-term insurer. So sharp reduction in current investment yield throughout the world, which data says, I'm not saying the data says, with the increasing burden of compliance regulations, these 3 things we are going to understand through communication process. So first of all, let us understand the world financial market. This also I have distributed in 3 parts. First part is 2019 global recession. No, everybody knows that what is recession. So after December 2000, what was the reason, how it has affected? Because we are an international company, we park money throughout the world in a different way. That is first we'll talk, and then 2020 global pandemic due to COVID. This is all mixed with that. And future, the third part, friends, in financial market, future is very, very uncertain. Next 6 to 12 months is going to be very, very uncertain for all of us. So if I run a company, if my board has to decide, they have taken these three things to understand the financial market, which I think if you will understand, you will surely communicate to the client about this financial market understanding. So let us talk first the 2000 global recession. Friends, this beginning of this economic slowdown started in December. And May, it is due to geopolitical uncertainty, US-China trade wars, US-Iran issues, US-Korea issues, Brexit issues. There are many, many issues which I don't want to talk on each and every detail. So broadly, these economic slowdown where everybody has seen. So what was the impact of this? This impact was this world market, stock market was in rough phase. If you see the entire 2019 world market was ifs and buts here and there for a certain time period was in a rough phase and with no return in reality. There were recovery in the month of January and February of 2020, but again, the COVID has affected a lot and they have gone back to the same original positions. Prices were going down with the tension between KSA and Russia. This was another recession which was affected. We are directly affecting our yield also. Third, all mutual funds investments which normally invest in equity market, debt markets are in red. We have been in red, and presently, if you see any of the stock market, I have seen a couple of days back some of the research to my team and I think there will be consultants from Abu Dhabi. Have understand if you are invested in equity market, forget about the last 1 year. The return in 10 years is almost negligible. Default of debt fund companies led due to liquidity crisis to many AMCs. So most of them, like if you have seen the Indian Franklin fiasco, these were the various companies at a small level also it leads to liquidity crisis. Yields on bond market was getting reduced. Why? There is a bond spread. So the bond spread, bond were becoming costly, so yield is being reduced. Friends, federal rates have started tightening. If you see the federal rates, I'll give you some chart, then you will make try to understand in 1 year, almost 80% of interest rates have reduced of federal rates. If you see the same 30 years, what we were giving you the bonus, how we were planning, if you the 30 years falls below, if you invest now in a US Treasury bond 2 years ago, we were getting hardly 2% return, almost 2%. If you talk about last 10 years of US Treasury yield, it is average, it was 2.86, but again, up and down what's going on. Let us come to the global recession. This is the latest figure of March 9, 2020. This US Treasury is giving 0.499%, and as of now, it has come to 0.25. So try to understand when, and we are not putting directly money to US Treasury, but this is an indicator through which our investment profile is managed. So this will be related to 0.1%, 1.5% and below. This is how Treasury yields are decided. 2019-20, during this period, if you see, there is a decline of 130% reductions in yield in 1 year, giving you 2.9, 2.8 to reducing to 0.9%. So there is a reduction of 130% reduction in yield. If you see to January to March, 1 quarter, so I'm coming to 30 years, 10 years and 10 years near, and this 3 months, if you see the reduction of 70%. So friends, what this indicates? This indicates the 2019 recession has directly affected the investment yield of fixed income instruments where LIC International exposed their funds for long term. We are not investing in ULIP kind of instruments, equity investment, because all the risk in those investments is borne by the customer. For LIC to continue to give the assured return, we park money in a assured kind of, sovereign kind of, guaranteed kind of securities. We can't go and invest equities customers' money because customer has not chosen us for equity investments where there is a loss of capital also. So try to understand this company in a different asset class. We have certain features on which we invest, and that comes onto fixed income instruments. That was the first part. So there were recovery in the first starting of 2020, but the 2020 global pandemic started in the month of February and March. So this is an unprecedented time. We always talk about this is not a natural time. This is not a calamity. This is a crisis in centuries. So this global crisis has affected. See, yesterday's 3:50 p.m. when I was preparing the presentation, 12.93 million people are growing. Still, it is growing more. The graph is not coming down. And you know, every day WHO's news coming so devastating, so negative that still the worries have not come. Still, the worst has not come. Going to be more worse and worse and worse. So jokes are also coming, but at the same time, we should understand from a company point of view what the industry is facing with this. After economic recession, this coronavirus has also been some recessions. And friends, this has come to tightening of financial conditions, and that is compliance burden. Because from insurer point of view, we have to see the future as well as present in terms of compliance ratio also. We have to maintain certain asset class balances to offer certain things. So from where the guaranteed is guaranteed, we have to give final addition bonus paid at the maturity that we have committed. So company has a margin only on 33% of the share of the reversionary bonus. That is one. Hospitality, retail sector badly affected in UAE. If you see the problems the industry is facing as of now, this led to the sharp drop in domestic and external demand. This led to the reduction in trade. There is no deal flow. So economy is totally in a recession. Economy is still down and down. There is again a fall in consumer confidence. Even somebody is they do not want to go on investment and expanding their business. They still wanted to hold a part of their surplus, part of their amount for a security reason, for emergency fund. Friends, this has led to distance in the production industry. And after that, what is affected to the financial turmoil due to COVID happened, friends? Prices in the market have fallen like a rock. It has fallen like a rock. After that, bond spreads have risen, leading to more risk of investments, because the company who requires money go for a very high returns on bond, but again there is a risk of investment. So the rating agencies is a worrisome trend in current time to guess the companies of investments. There is an economic recession already started and it is on the way. Friends, this has led to increased unemployment. So people are losing job, people are getting the reduced salary. Since these are going to lead, there will be some bankruptcies also with the new normal, and that many government is started working on the definitions of bankruptcy, but it's not going to change the economic recession, the liquidity crisis in the market. Friends, how it has affected our investment yield? Try to understand from a perspective of a return. Impact of coronavirus on the stock market, you all have seen. This seen almost 20-25% have gone back. Again, the sign of weaker, but on a selected stripes. So how again weaker has started? Because the Fed rates, the real story of US S&P and Dow Jones, if you see, I'll tell you, because the interest rates have reduced a high amount. So what institutions are doing in United States? They are taking loan and investing in S&P and creating money, because that is almost zero return on loan and investing in equity market. So that is one of the reason equity market is growing, but it is not linked with the economic revival. Earlier, when index of any equity market was of any country, it was indicators of their economic growth. But now the pattern has changed. If you see the Indian market also, the pattern is same. Pattern repo rate has reduced to 4%. So friends, how bond prices is affecting us? See, I'm giving you certain bonds prices. After March, the prices had increased. So prices increasing means you get a very reduced margin on yield. So if your bond which is supposed to be 100 rupees bond, $100 bond, and you have been getting $80 3 months ago, but now you are getting at $90, so your difference of margin has reduced. This is how the zero coupon bonds. So this chart clearly indicates what is the trend, which is in 40%. Since 25 years zero coupon US Treasury, if you see, the bond prices increased to 40% and reducing interest at the same rate. This is how is related to the bond price. Again, what is it directly impact on the Middle East? Because there has been regulations for us from this market that you have to start investing only in UAE markets. You can't. Earlier, LIC used to invest throughout the world in US dollar asset class in a different part where we get a good currencies, good currencies, same good country returns, good sovereign bond. So we used to invest. Now there is a compliance also. The most of the part you have to put it here. So we have to come with the Middle East impact also. So Middle East, if you see, the oil prices has plunged on a very, very low supply in the market due to pandemic, and this is a price war between the suppliers. This has also affected the overall productions. And you see how it has affected the financial fallout in a world, emerging markets, Middle East, and all volatility index is a very, very in an uncertain mode. If you say dual shock that has collapsed due to oil, this is per day, 100, like in US, 91 million USD per day loss in a state oil prices for in 2020. And this is somewhere increasing. Now the prices has increased. So there is a coverage on that. If you see the tourism, which is the main backbone of UAE market, the tourism industry, the UAE is losing every year 50 million, every day 50 million USD. So friends, how this data speaks. There are many industry, air transport, hospitality, oil, gas, petrochemical, manufacturing, everybody is going to be declared. There is a packages from different sectors, but packages is just to revive. Until unless your business will continue to move, the economy will not boom. So friends, for next 6 to 12 months is going to test us. And that is what Raju sir has given you the video, the fear you have to face and rise, because this is how a financial advisor, a risk manager, which you all of are doing, dealing with the uncertainty of life in this pandemic and before the pandemic also, we are the best one to judge this uncertainty of financial market. The future challenges for company, friends, uncertainty about the nature and duration has complicated the policy response. And we are not a different company. We are in the same market. Increasing fragility and bond market affected the investment portfolio. And friends, we are having a third big challenge to balance between easing credit conditions and avoiding vulnerability to capital outflows. So these three things have forced a board of LIC to come out with a strategic planning, and which I'm not quoting official term, but I'm quoting as a marketing term. Friends, this is being a life insurance company, always look for long-term investment portfolio, assessing the long-term market impact of financial situation with an eye of managing risk at short term. So whatever is happened, it is a temporarily set up, temporarily arrangements for managing risk short term so that the future can be sunrise for us. The board examines the capital capability and solvency margin, which probably customer will not understand, but try as a marketer, we should understand. You need to have a required level of solvency in the year 2020 and the next year also, considering future uncertainty, so that you devise a strategy to ensure that they have adequate capital and resources available with them. So friends, what LIC board strategically opted? So considering the challenges and the strategy, LIC aligned the dividend payouts for the year 2019, only one part of reversionary bonus that consists 33% of the customer's portfolio, as well as rationalized expenses of management for current 2020, so as to align with the above strategy. Second, LIC decision to reduce bonus for year 2020 is in view of emerging market conditions. Third, the current pandemic has brought series of uncertainties in financial market, affecting the overall asset class of all insurers, not even LIC. Every insurer is affected with that. So fourth one, considering the volatility of world financial market and uncertainty of future investment returns, the bonus has reduced. In no end to crisis of COVID-19 till medicine and vaccination is in market. You know, there is a very certain future, very few people, and we are not able to see the sunrise light in this dark tunnel of COVID. So next 6 to 12 months are going to be testing time for all financial market. LIC being a long-term player to provide a sustainable benefits to client in future will have to compulsorily have to hold some reserves to balance the risk assessment in futures. So the reason behind is that last year was not good. 2019 was running from recession. 2020 already is begun with this. Business is totally affected. Future is very, very uncertain. So for companies like us, where all the risk is borne by LIC, rather in unlike other companies working in the UAE market, all the risk are borne by the customers, not by any insurance company. So here all risk is borne by the company. Company has to take some strategic decisions. So friends, my golden answers in summary form to all stakeholders attached with the LIC can be this, and this you can treat it my official golden answers. Friends, accept First of all, let us accept we are in an unprecedented year of global crisis. Number one. Number two, the reduction in bonus for 2020 is surely a temporary event. Let us not make it as a future all 20, 30 years. If you sell a policy, so same rate will continue. So if market improves, what I personally see, COVID-19 will also pass, and like previous crisis, this will also pass. This has to pass. Confident, I'm very much confident a wave of business energy will be unleashed. We are going to have a very, very new products we are coming. We are diversifying our product umbrella, and through ULIPs also, we are going to expand our business channels in a different way, in a different marketing perspectives. So for us, if I see, we are going to have a wave of business energies that is going to be unleashed very soon from LIC International. We are going to, in new few months, will be very critical for all organizations as they build their resilience to order to persist. And we are working on that resilience. And I personally see being almost like 70 years old, owned by company LIC of India, and 30 years in this market, we are going to build certain resilience to this substance in futures. Companies, we as a company looking for select the businesses and master the new business environment. We are working on that very soon, and I am very confident this LIC will deliver long-term sustainable growth in the interest of our policyholders. Since these are my golden answers to all my stakeholders who is listening to me today, and this is going to take this company's trust more powerful, but in the days to come. Friends, third part I was talking about whether this change in 33% of reversionary bonus share has made the plan so non-volatile, non-marketable in the current trend. Let us understand some of the high sold plans. First of all, let us talk about the first plan is PEN 202. In a current bonus rate, friends, if you see the rate of interest for a different, I'm talking about compounding interest rates. I'm not talking about yield. That will be much more bigger. But without affecting any insurance cost for 11 years term, for 15 years term, for 20 years term, for 25 years term, if you see 0.40, still we are continuing in current year rate, 3% for 15 years term, 20 years term, 3.37, 3.42% in US dollar. Please remember it is in US dollar return. And where we are providing certain things without calculating the cash value of free life insurance cover. Suppose somebody pays 18,000, he is getting a life cover of 100,000 from day one for the remaining 20-25 years, for 10 years, 11, depends upon the term. So if he dies during the term, so there is an insurance point also. We are not discounting that cash value of insurance, because if you reduce insurance premium from that, return will go more than that. That is PEN. This is what the PEN. So minimum return during global financial crisis. I'm talking about only current year if you calculate the yield on this. Second, PEP, which is a child education plan. We are the only company in the market who is offering guaranteed return in return in the form of a very, very high yield. If you see 4.48%, if you choose the limited, normally that is 99% of policies sold in a limited payment option year. 4.48% is a compounding IRR with this 0 years of age. If your child is 5 years of age, you get a 4.23. If your child is 10 years of age, very high age, and you get a very limited time to the money back, is 3.58%. Do you think it is a small amount in this market where equity market putting money in S&P are offering 3-4%? So we are assuring and guaranteed in the return bond. This product is still alive, is still on the way, and that is totally guaranteed. Let us give me one plan in UAE offering 4% plus IRR that accept LIC. It is not returned. Number 3, the most volatile, somebody doesn't want risk for a high age group. This is the return. If you see for 11 years term, for 15 years term, for 20 years term, friends, this is a return of 3.62 to 3.85% is a assured return of current bonus rate. Remember, current bonus rate. From a financial expert, last meeting I talked about, you need to change your set from a financial advisor to business advisor. If you are a business advisor, you must understand what is this rate means in today's term. Offering 3.85% for 20 years of term with this brand I think that is one of the best yield we have. Best plan for higher age group as retirement plus in one, because there is no insurance cover once the return of investment is being paid. Friends, this was regular investments. Now there is one point which is a single payment investment for a short term. There is 1.240. With the current bonus rate, friends, rate of CAGR and rate of annual yield, both I have mentioned here. These are the CAGR rates and these are the bonus rates, annual yield. If you see, for 100,000 sum assured, people are paying this much of money and getting 1.58% to 2.3% assured in today's term, and there is a chances of getting better return. You will be feeling, sir, 1.5% in 5 years is not a big return. Because if you have not studying your business channels, you are not studying the market trends, I'm sure you will ask for it. Friends, best plan to replace FCNR USD investment short term. If somebody is investing for 5 years scheme, no company in this market gives 5 years in insurance policy. We still offer 1.58 and 1.63% return for the 5 years. So easily for a short term duration also people can get a return in USD. I will talk about that. So do you still feel the return in USD in current market is less? Let us take the fact check. Friends, mostly NRI's the favorite instrument is for diversifying NRI customers is FCNR term deposits, and FCNR rates is less than 2% as on date. And if you'll surprise, 2%, not even 2%, it is 1% as on date in a very good company. Let us see the scene. This is yesterday's updated rates, friends. If you see, HDFC is almost offering 0% yield, 0% return, friends, for 5 years term. Kotak Mahindra 0.1, ICICI Bank 0.63, SBI 0.83, Canara Bank 1.08 cents. These are the returns, almost like 70-80% company till Bank of India is almost 1%. 1%. What is takeaway from this data? The real truth is HDFC and Kotak Bank is offering almost 0 return in USD. So if I give for 5 years 1.63, is still I prefer is a very high return. Second, top bank like SBI, ICICI, SDFC, Kotak is offering less than 1%, and we are giving in 5 years more than 1.63, all due to uncertainty of future USD market. Try to understand this. LIC International still continue to offer more than double what banks are giving, friends. And you want to see how much money is being parked in Forex reserve? You want to see FCNR every day, millions of premium, 100 millions plus is being invested in FCNR deposits. From Gulf, I'm talking about from Gulf. So look for opportunities. You have to see the winner is still an LIC in this market. Considering when we were offering 4.5, we're offering 4.12 and offering 3.62. Still I am offering 1.63 because this is unprecedented time. So what is truth? The truth is LIC International still offers competitive best return in guaranteed assured investment product in whole UAE market, and we are dealing with UAE. If somebody says, no, I'll get a bond, okay, you invest in bond, who will bear the risk? You is going to bear the risk. If LIC takes the risk, LIC will give you the return which is much, much competitive in this market. So what is the future? What is the future? So these are the story, these are the facts and figures, truth you narrated. But what I personally, the future of financial market post-COVID seems very, very pragmatic, friends. Very, very pragmatic. I always say, how many of you believe that through a crisis could emerge a better version of you? You have to convert this opportunity into your business. You have to come out your comfort zone. When FCNR was 2%, LIC was offering 4.1%. It was very easy to sell. We were giving more. Now FCNR is less than 1%. We are giving 2%. First of all, you should understand we are in an international market. Let us not compare in USD with the INR return. And that has also to 5%. Irrespective of how bad things happen, friends, bad time always pass. Remember, good times always returns. We are going to have a cheering moment, maybe after 3 months, maybe after 2 months. But many of us, I personally see, can we have a cheering moment as of now, because this is the right time when people are scared of risky investments. They look for assured and guaranteed return investments. I personally don't see the return which we are giving is still a very, very high competitive in nature. You see how the IMF has also prediction the future is going to be very, very sunrise. In 2020, there is a degrowth of -3%, but the upward growth in 2021 is 6%. So difference is 9%. It has never been in the history in decades. So what is optimistic? So I personally see future of insurance market is going to be sunrise. Of course, sunrise. It's going to be sunrise. People have started believing the need of the insurance and assure kind of planning. They have started working on asset class and cash flow management. I personally see that you as a financial advisor, business advisor, give a proper advice. Let us not, sometimes you have to sacrifice your own incentive also in a current trend, because you have to maintain your customers, you have to sustain your customer for a long term. If you have wanted to sustain in this market, I think LIC is going to help you bail you out on this. Bonus rates will surely going to recover. This is what my optimistic view. Capital guarantee in terms of guaranteed bonus must be the highlighted, which has never been in the past. Competitive rate of return in long-term plans is still, we are very, very competitive, friends. And friends, you have to align your product according to the need of the customer, according to the demand from the services. You have to align your supply chain. So friends, this is what my expectations, I personally see the 4 things you should have. You have a patience in this market. You should have a persistence. You should continue moving with the soul, with the same strategy, with the same confidence. You need to have certain core skills, which I normally try to give to my team. And this is second interactions to all of you. Provide some of the core skills with the facts and figures as a financial advisor of LIC to push LIC. And finally, friends, if you continue the first 3 points, a bit of luck will surely come. Friends, before I finish my presentations, I can share you the golden mantras of success today. Friends, attending training programs only increases your knowledge. Remember, only it will increase your knowledge. But friends, your business will increase only if you put the same knowledge into your actions. So time starts now. I think I'll open to the Q&A session with the genuine questions, and I'll try to give you my own answers to understand from a marketing point of view. Wish you all the best, friends. Thank you very much. Good luck. Thank you, Raju sir, for this opportunities to interact with your team. I will stop sharing my screen now.
Wow. There's a stunned silence.
No, if nobody is having question, at least you can share whether you liked it or not. Otherwise, it is just like putting my hard work a day. And
right. No, Dr. Pradeep, it's a really pleasure just listening to you. This is the second time I'm listening, and with rapt attention I listen to you, and you really, thanks for sharing the insights, and I think you've done some in-depth research, and even if the bonuses were it had dropped down to 0, this presentation would actually ensure that we still go out and offer the product. So that was the confidence throughout the presentation. So really oozing with confidence. So yeah, in fact,
thank you,
it was very encouraging.
I think what people don't realize that Pradeep has a bowl of motivation every morning with milk and a bit of sugar, and he comes to the office and makes sure everyone in Abu Dhabi office is full of motivation. I mean, we're having MDRT qualifiers at this time, with these conditions, unsurpassed. I mean, they're doing this, they're getting the results. We have some of our consultants here in Dubai qualifying at the same time. So it can be done. There's no question it can be done. And with the right mental attitude, you've got to change. We can't be working in the old fashioned. You've got to embrace the change and go forward with the change. Adopt it, embrace it, and activate it, I think is the answer. The 3 A's. Pradeep's very big on the A's, but the 3 A's are very important.
Okay, sir, I'll take one question. I'll take one question because Mr. Jairaj Ramakrishnan has sent one question. He is asking when will they be available to offer to clients? It is available. Who up to you? I fail to understand what is nobody stops. Even the bonus will change. Only the illustration seat has to be changed. Rest everything is same. You have the same product, same premium, same seats. I think seats are available. If not available,
So, Dr.
could
Pradeep,
be
what I meant is,
available.
yeah, sorry to interrupt you, Dr. Pradeep. What I meant is, Mr. Raju mentioned at the beginning of this meeting, saying that these illustrations will have to be changed. So, which means that the rates are obviously going to change. So, when can
It
we
has
start
already
preparing
changed.
illustrations?
Yeah, can I take that?
Yeah, yeah.
Yes.
Jairaj, if you remember, I've sent you the link for all the products which are there on kingstarinsurance.com's site. And
I've received that mail.
we have also prepared the illustrations on all the 9 plans which were available there, and also on the immediate annuity and deferred annuity plans. They're already there. All right.
All right.
They're already there with the changed bonus rates.
Okay. So if those rates are changed, then good. Yes.
Yeah. No, this is a message for everyone as well right now, because please go to the site, download the Excel sheets where the illustrations are there. Please work them out and check them out. I know somebody has already done it. Anand, you're there? Anand Rodriguez, he had worked out a few, and
yes,
a few consultants who did. Yeah.
Yes, I did. I have already presented the new illustrations to the client, and with the new bonus rates.
Okay.
Any questions, Anand?
No, perfect. I mean, this was again very much encouraging to get the background as to why this has changed, and it is just for us to digest these realities as you mentioned, so that we could transfer it to the clients while discussing with them. That again, and the good thing is that you mentioned that this is a temporary phase. I mean, of course, 2020 may not come again. The events that have happened this year are probably for this year only. So the rates may be for this year only, and maybe next year we could have a better bonus declared. So let's see. I mean, keeping the fingers crossed, and we're trying to do as much as we can. So thank you again. Yeah. Thank you very much for highlighting these.
So even my presentation today is clearly elaborated. Even in today's also, if you continue the same bonus for next illustration, if you prepare, they will give you the picture of maturity based on today's rate. So there is always chances of getting more commitment, more promise delivery at the end of the maturity, because if there will be upside of the bonus rates, is going to be more trust on you. So even today's rate also, if maintain it, that is a very, very competitive in market.
Right. Hopefully, I know. When I presented it to the client, I showed them the bonus rates for the history of bonus rates, and I told them that see, this is the rock bottom, and from here it will only go up. Okay, there might not be a possibility of going down from here, but the possibility is very high that it may just bounce up from here. So yeah, that's what was mentioned.
Correct. Thank you. I think I have not presented any plan as of now to you. I don't know how it has been presented in the past. For me, always plan presentation is not sharing of benefit illustrations. Plan presentation has to be linked with certain, when you do the need analysis, you have a beautiful booklet which you maintain in Nexus, doing your goal setting, risk analysis, and distributing the different asset class. Whether it is doing holistically as per the requirement, or it is and then preparing the forms, that's a different issue. But I would suggest LIC has still a very good, because the pyramid, this is my own concept of pyramid distribution of asset class. In that, LIC International has a very, very strong market in this UAE. I hope if you go understanding that pyramid concept, everyone will be able to sell LICs, what to 10%, 20% of your premium distribution in LIC, and everybody can participate in that. So in future, maybe I'll on certain concepts, if I get a time, I'll definitely interact with all of you.
Right. Pradeep, thank you very much once again. I'm
thank you, sir.
Just leaving because there is a small meeting, but you can continue if anybody has got any questions.
Yeah, if anybody is having, otherwise we can quit. No.
Yeah. Okay.
Anybody is having any questions?
No, well, Raju, if we can have the presentation, is it possible to share the presentation? Because
yes,
there are some figures.
Yeah.
This is already recorded. This is already recorded, so you can get recording, sir. We can share recordings to everyone.
Sure, I will share it. And any more questions after looking at that, please do send it to me and I'll pass it to Dr. Pradeep and get answers from that. All right.
Correct. Correct.
Thank you very much once again to everyone. Yeah. Thanks.
Okay. Okay.
Thank you. Thanks a lot.
Thank you.
Thank you very much.
Thanks for
Thank you,
joining.
doctor.
Thank you. Thank you very much.